So I think you have me for another 40 or so minutes, so please bear with me. We are changing pace slightly, and the next panel is going to be looking at ESG integration. It will be an interesting panel. We've got some of the world's largest investors, and we're going to be talking about why companies that report ESG are typically best run and therefore best to invest in. So how the ESG lens can provide a more complete picture of the risks that are involved. We're also going to talk about a popular phrase, greenwashing. I understand there's even now rainbow washing. I didn't know that. But how this is becoming more prevalent, how do you spot it, and how do you avoid it? So without further ado, please welcome my next panellist to the stage. We have Mr. Arsa Indaravijaya. He's Assistant General Secretary, Senior Director and Head of Investment at Government Pension Fund here in Thailand. We also have Ms. Edris Boey. She's the ESG Practice Lead at Maitri Asset Management from Singapore. David Smith, Head of Corporate Governance, Aberdeen Standard Investments Asia. Mr. Kim Chong, Head of Risk Management and Compliance at the Hong Kong Monetary Authority. Mr. Arnout van Rijn, Chief Investment Officer, Asia Pacific of Robeco. And last but not least, Mr. Joep Huntjens, Head of Asia Fixed Income at NN Investment Partners. Thank you all very much for being here today. So I thought to kick off, we would perhaps do an audience question. We've got two of these, so please do participate. The first one is, how are your ESG teams structured? You can perhaps bring that up on the screen, hopefully. Are they integrated? Are they dedicated teams? Is it some sort of other form? Or you don't currently have an ESG team? Okay, well perhaps while that's coming up, we'll just kick off with a discussion. And,
do you want us to vote?
Yeah. Well, I know a bit about where you're coming from on this. But so perhaps integration is something that I know is important. So if you could tell us about where you're at.
So for Robeco, indeed, the strength I feel, and also the reason why I'm here as a regular financial, I would say, portfolio manager, is that we try to do that integration as full as possible. So although I'm absolutely not a specialist, I like to think that I know quite a bit about ESG investing, and it does mean that all of the investment cases that we write have that integrated into their business model, but also, and that I think makes it even stronger, that it makes us think about, okay, we do discounted cash flow analysis on a company's fair value, and we will integrate factors that we think are related to their ESG, and whether that's indeed then additional risk or additional cost that they will need to make to become environmentally compliant. We try to break that down and really fully integrate that into the investment case for companies that we invest in.
I wanted to talk to you from a credit perspective from NN Partners. Why is it that you believe that companies being transparent about ESG do tend to make better investments?
Well, that is a bit an issue. Is it working? That is an issue which has been discussed earlier today, that companies in Asia, especially the non-listed companies, are not as transparent than companies in developed markets. If you don't have the information, the data, which is often the case for those non-listed companies, if you don't have the data to make a proper ESG assessment, it's also not possible to have an overall view of the risk profile of the company. And typically you don't give the companies the benefit of the doubt. It doesn't give a good impression if there's not a policy or the data are not transparent. So in the end, it's the issuer who has to pay for that in terms of a higher yield.
Arsa, at GPF, I wanted to ask how the fund is looking at ensuring it's looking at both the E, the S and the G, because here in Asia you often hear that the G is the more focused on thing, and I suppose governance is very important, but how are you going about making sure that the other two play a part, the E and the S?
I think as one of the key consideration of a mainstream investor is to make impact investing, and we are one of those who are considering and who are integrating all those ESG into our investment process. As you mentioned, E and S and G tend to be relevant in a different context. G, which is governance, is more relevant to the EM economies, to my understanding, because there are various ruling and governing authorities. Like we have SET, SEC, we also have a BOT and a few others SRO who will be governing, issuing guidelines and all the implementations. So I think G is the part that Thailand has been doing for quite 10-20 years, and it has been very crucial during the past few years. Whereas in Europe, they already passed the stage of the governance, and they tend to concern on environmental and social. And I think E and S has been on the national agenda, and as I understand,
here in Thailand.
Here in Thailand,
Yep.
I understand that just yesterday, the government just announced that we will be embarking on, having a national plan on human rights, which is very important to the global investors, and this is one of the key elements that they are looking at when they assess the ESG. So I think this is a long journey, and from our perspective of integrating ESG into our process, I'm from asset allocation side, so we look like a long haul, and as we stretch to like 10-15 years, the allocation or importance that we allocate to non-financial factors has increased drastically. If we were to do just a tactical tilt, so that is not relevant at all. But then if you move to like medium term, like 3 to 5 years or even longer, so those become a vital role. And back to your question about E and S, I think with the engagement with another 32 asset owners here in Thailand, we have already formed and created a guideline as to what the listed company or credit issuers or bond are expected to deliver. So that would be a very preliminary stage that we will embark on.
At Robeco, you've got around 65% of your AUM in ESG investments, and I know you're a very early entrant into emerging markets. And you mentioned when we first spoke that the E part of the equation has been gaining importance in Asia, but particularly in China, where it's also become a social issue now. If you're not doing well on that front, there can be big ramifications from a social point of view. What has your experience been?
Yeah, so in China, the government has always looked at companies, well, they need to do better, and they were very aware of the pollution in Beijing, and that was costing them votes, although they don't officially vote, as you know. So they were very worried about that leading to social unrest. But 10 years ago, if you were running a power plant in Guangdong, there would be scrapers or whatever you call them inside the power plant, but nobody would enforce them to actually be utilized. So the management of the power plant would say, well, let's switch them off, it's going to be all right. And now the enforcement has really become very, very strong. So these things are really now taking place in China. And it does mean that, China is becoming a much more environmentally friendly country now. And it's no longer just the central government trying to enforce that, but also on a local level, it's just no longer acceptable. And that's, I think, also a generational thing that we're seeing across the world, that our children no longer accept this, whereas people like me would say, well, yeah, but we have to live, right? So, but no, we can't go on like that.
Edris, I wanted to come to you because it is relatively unusual for a family office to have such a focus on ESG. And I know you've had a career at KPMG before, and then you've been brought on by one of the really big family offices here in Asia to look specifically at what they're doing with regard to ESG. So how, you know, Arnout just mentioned the younger generation. How is the younger generation's approach different?
Thank you for the question, and privileged to be here today. My experience in the family office has been the millennial generation. They have really been pushing this agenda within their families. For Maitri, if we were to look at our own heritage, it's actually been in talks within the family, within the business for quite a few generations, because the business today is in its 4th generation. Sustainability has been a key theme. I think that has enabled the family to thrive even in its 4th generation. So having said that, I think what we do see is families that have been having this conversation about sustainability. If they've been having it in the past decades, the transition will be a lot easier, as what I've seen in my company. I think if for businesses that might not have been talking about it, then it might be a bit tougher, because the millennial generation, they are very outspoken. They know that climate change, for instance, ESG, sustainability, they're very particular about how their family are actually treating these issues and addressing them. So they're taking a very firm stance on this. Yeah.
Most of the gentlemen and ladies on this panel are from the investor side, but Mr. Kim Chong, you're a central bank. So the HKMA does seem to have quite a progressive approach when it comes to thinking around ESG. Can you give the audience a feel of the approach that you do take?
Yeah, we look at ESG, well, I'm from a risk management unit. We look at ESG from a risk perspective. We believe that if you look at ESG factors and ESG issues, it gives you a better long-term risk-adjusted returns. So it's actually driven from a risk angle. Our unit is the champion for ESG within the HKMA. Now, we look at from my side, I look at the portfolio, which is a lot of foreign reserves in HKMA. But from our kind of banking supervisory side, we supervise a lot of banks in Hong Kong. And then we also have a development side, which is what we call a market development. We've established a Center for Green Finance to align with the Hong Kong government's approach in terms of making Hong Kong a green finance hub. That was about a year or two ago. So with 3 forces together, we have a 3-pronged approach, which was announced in May this year. So we have, from a banking side, a regulatory side, we went out, well, we signed up to the NGFS. We are a supporter, a member of NGFS. We went to the bank sector and said, look, we're going to approach this from a banking sector. We think that if you don't take climate risk seriously, it will have an impact on the bank's profitability, and in a bigger scale, it can have an impact on financial stability. So sort of echoing what the Banque de France and Bank of England did, we went out to the banking sector and said, look, you go out and assess your climate risk just from the loans you give to your customers, and